Hey Alpha Fam, Coach Jam here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe, we really do appreciate the support. Let's get into the market, guys. So, we've been talking about this for a little while now, all right? And I said it. I said if this thing didn't immediately spring back into this $80,000 zone, that this was not a spring. This was actually a breakdown of a bear flag, and that we were most likely going to get stuck inside of a range for the next 2, 3, 4, 5 months or whatever. All right, and that appears to be what's happening. Also, too, we're seeing things like, even like price action wise, guys, we're seeing a lot of weakness, and it's because of a few different things. One, we've got this overlooming Iran conflict that's still, we're seeing a lot of doom posters. There's a big buildup happening in the Middle East. There's a bunch of whistleblowers and people saying that there's going to be an attack. It's going to be imminent. So that's something that's been definitely having an effect on the market. But then equally, you have the Supreme Court ruling on Friday, which was to abolish the tariffs. So then Trump comes back and says, hey, you can't get rid of the tariffs. I'm going to put a global 10% tariff on the globe, and then raised it to 15%. All right. So you're having all of these things converging already in a super weak market, guys. The market's been weak, and we know that. And again, we've been talking about this. I still think 2026 is going to be a good year for crypto, but I think we have to get through this portion of it first, guys. All right. So if you're looking at the market right now, and I'm trying to explain this to people, this isn't a time to pack up and leave. And this is the worst thing about these ranges, guys. All right. I'm going to be completely honest. They really drive people out from time capitulation. People are already down on their bags. And then what happens is you keep them where they're seeing their bags down for a long extended period of time, where people just give up. They just say, hey, I'm cutting my losses, I'm exiting the market. And then this is one of the reasons why most people end up losing. So I'm telling people, you want to create a strategy, all right? The best R&R, everybody knows, is to be greedy when others are fearful. If the entire market is fearful and you have the fear and greed at single digits, guys, this is when you want to be figuring out a way where you can create a strategy, acquire some capital, and be entering into the market. And I'm not saying you have to rush to do this. I'm saying be very slow, methodical in building positions over the next few months during this bear phase. All right, guys? Because when things take off, when things start to go back up, they will. Things are going to go back up. You will be very happy that you took advantage of this, and wasn't, because there's everybody's a different situation in the market. You've got some guys that are significantly down on positions that are almost frozen with fear, and they're just kind of sitting on their hands. You've got some guys that want to be active, that might be down on positions but want to continue to build blue chip assets. You have some guys, this is the times that they wait for. Like, this is when they enter the markets. This is when they buy. This is when they build positions, because they understand what's going to happen, guys. And then you have to understand too, we understand the macro landscape right now. The macro landscape is giving us a lot of conflicting data. All right. That's one of the big issues that we have right now. For instance, like GDP, we had the 4.4 crazy great GDP rating, and then the next time we get it, it was significantly lower. So we're getting a lot of mixed data right now, guys. It's even stuff like with the unemployment. Then you have things like inflation. You have one part of the inflation say it's dropping, then the next thing is saying it's ticking back up. So you have a lot of this conflicting data with this overlooming war FUD that's happening in the Middle East, with the Trump and the tariffs and all of this stuff happening. It's just a lot of uncertainty in the markets, and then this is what you see from it, guys. And then if you notice, the thing with crypto is, all right, it's hyper reflexive. It's like it moves faster than any other asset. So I think what's actually happened is crypto's actually front ran this broader correction that we might see in the broader market. Now I will say this, all right, and again, this is all goes back to the TradFi markets, guys, because they're the ones that have been driving this cycle. They're the ones that have been driving these markets. So you have to look at the traditional markets. And then on Friday, we actually didn't have a bad day. All right, so we actually, like, this is futures. S&P 500 got back above the 50. Same thing with NASDAQ. It's still, well, let me get rid of all my drawings. It's still well below the 50, but it's starting to tick back up. You've got the S&P 500 that's reclaimed it, all right? And that's what I said the other day. We need to see some strength come back into the stock market, all right? Because what that's going to do is it's going to have a trickle effect in bringing some certainty and some strength back into the crypto markets, guys. And we need to see these things honestly get out of these ranges, because if they don't, guys, we've talked about it several times, then what this is displaying is this is no longer looking like an uptrend, and instead is getting to look like a distribution phase. And if this is going to be a distribution phase and then this thing comes down, we know for a fact this is going to bring crypto down with it. And if crypto's already performing weak, guys, then this is where I think we have to think logically, what is the plan? All right, what are they trying to really accomplish? What are they trying to really do? Well, one thing is, and I've said it, I think they're going to chop us around in this range for a little while. All right, in that range, at some point, I would expect them to do a spring. All right, when that spring happens, you have to think to yourself, where do we think they're going to drop it to? Well, the first thing that we want to do is just from the last low to the last high that we had for this breakdown, let's look at what the fib says. What's the next level, which is the 51, the 2618. That level right there, and then I would like to look and try to see if I could find any other confluence for it. And you can see where that level comes into, guys. You know what I mean? This level does have quite a bit of significance in it. If you look at it right here, you can see it. This is where this right here pushed this price action up. So this is where we came in, found resistance, came back down, kind of made this miniature bull flag right here, then pushed price action up where we made our first all-time high. And then you know that when the Japan carry trade happened and unraveled, this was the zone, the general zone, where we found support. All right. So if we were to come down to that zone and they were going to try to, create a spring effect, this would be a zone that we could look at potentially setting up limit orders. All right. Now, I know a lot of people don't want to hear this because they're like, whoa, alts have already been decimated. I can't even imagine these things going any lower. Well, the thing that's kind of crazy, what we're seeing right now, guys, with a lot of alts are, most alts, and not saying that they can't come down 40-50% more from their current levels. They definitely can. But most alts have already had a lot of their stuff unwound. Most people that wanted to exit positions and sell at this point have had almost 6 months of opportunity to do so. Since October, November, December, January, February, we're at 5 months so far to exit. Now, granted, some people don't exit immediately. It takes them a long time. They try to hold strong, and that's where the time capitulation comes into effect. With that being said, if we know how these Wyckoffs are created and what they're going to try to do, then we know that how these spring effects work. What you can do is you can go through your alts or whatever projects or, Bitcoin, Solana, Ethereum, whatever, and look for the most logical place for the spring to occur and where the most logical place or level for it to happen and set limit orders up. I tell this to people all the time. You'd be surprised. You can have retarded limit orders set up, like limit orders at levels that you never think in a million years would ever be hit, and you'd be surprised. And 1010 showed us that. You could have had a limit order set up on something like Curve when that whole, liquidity, when the Athena stablecoin depegged and all that nonsense happened, and that thing wicked down so far, sucked that liquidity and pushed back up so aggressive, you could have had a limit order at a ridiculous place and then immediately been in profit by just being proactive. And the best thing about it is they don't get triggered unless they get hit. So it's not like if you're sitting on stables, and this is something that I think that is a smart thing to do, and what people should be doing is creating a way to generate revenue, to stack up stables, to get prepared for these type of events. All right? You're going to have some time to do it. It's not something that you're not going to have a week. All right? These bear markets typically last about a year. All right? They typically bottom the following, I think it was March or June, from where they top, which is usually Q4, which was ours was October. So if that's the case, then we're right around the corner from it. And then they will chop sideways for a period of time. And what you can do is, I don't think this bear market is going to be as brutal as the last one was. I just don't. I don't think it is for a few different reasons. One, just being that the market structure is just radically different than where it was 4 years ago. We've got multitude of things that you can go down and say that there's complete differences. It's comparing apples and oranges. So with that being said, you could even see how this accumulation range was and how long this one actually lasted. And you would have to say that this accumulation range really started from here and lasted all the way until it broke out of this zone right here. All right. And then this zone right here, you had roughly like 275 days to accumulate during this. And you didn't have to rush to do it. You set limit orders every time you get these mass FUD events where you seem to come to the bottom of these ranges. You also don't want to catch a falling knife. So you want to see some basing to happen. All right, guys? You want to see this thing find support and start creating a range. All right? And then when it does that, you'll start noticing the bottoms of the ranges like this one. You can see this was the bottom of the range. This was the spring event. And then it, obviously this was its retest, and then got back into the trading range. And then, the rest was history. This is what led the move to 126. You had plenty of time to do this. All right. So what you also want to do, and I said it in my other video, is if you're holding on to things that are just like not showing any strength, that are just seemingly dead projects, but there's just, and even, I don't care if you're down 80, 90% on it, this is probably a great time to rotate out of those, guys. I would prefer to rotate even if it's $100 and I lost $900 and I'm down 90%. I would prefer to rotate that $100 into a blue chip asset that's at also 80% discount and hold that, because I think that this blue chip asset is going to have a way better, greater chance of not only reappreciating at a higher cost, but also when things get good to at least have a fighting chance to try to make back up that loss. All right, guys? And don't hold on to your prior portfolios, all-time highs. Don't keep that in your mind. Don't focus on that. Almost look at it like you have a clean, fresh start right now in this market to be able to participate inside at the levels that you should have when you first got excited about crypto, and actually take this serious over the next year, and you can radically change your life. All right? And again, guys, if you want to learn this stuff too, like if this is your first time finding my video or seeing some of my content, I've been a digital asset investor for the last 5 years. I'm the founder of Alpha Syndicate. I also host all of the Crypto Talk workshops inside of Luke Belmar's Capital Club. And if you want to understand how we take this and learn this market and how we approach it, how we combine the macro, the fundamentals, and technical analysis to help give us an edge over the market, click the link below, guys. We'll see you inside.